The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good Tuesday morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN just after 9 a.m. Eastern Time Tuesday morning. We got about 24 minutes to go until the start of trading, and you have markets backing up a bit in red territory. S&P is off about 16 points. That's about 0.4% in the red. You get the Dow off about 0.6%, trading down 75 points at 13,277. That was the Nasdaq 100, down 0.6%. You have the Dow off 0.2% off 79 points. And the Russell off 8 points right now. That's about 0.5%. We got a little bit of a sell-off going on again, I think, in some of the banks, right? Yeah, Pac West. So you get a sell-off intraday yesterday. We're going to open down another 10%. It's only 60 pennies, 10%. I was talking about on my show yesterday. Be careful, man, because if you think that the volatility is over when you go from $40 down to 11 back to 30, and yeah, yesterday during my program, we were at about $30 today. You're down another 12% on Western Alliance. Let's see how the big banks are trading right now. JP Morgan, down about 75 cents. Bank of America this morning, down a bit. We jump over to the commodities. Crude, down about 83 cents. It's been quite a run. We got a high yesterday, almost approaching $74. We make it up to a high in crude of $73.69. Right now, we're trading at $72.36. Gold contract, negative $2 at 2,030. We were up at 2,040. Yeah, just about 7:30 a.m. this morning. So gold contract dropping a bit. We jump over to the dollar index. There you go. Dollar catching a bid, 101.80. That's going to cause some acceleration across the board as we get markets in negative territory. And we finish it up with a wrap-up as we jump to yields. And you jump to the 10-year. And we're flat right now, but you were higher. So as we've seen, that dollar spike, right, since about 6 a.m., since about 7:30 a.m., you've seen the 10-year. We're now lower by 10 ticks, so you got a little bit of higher yield. You have a little bit of dollar strength. You have a little bit of market weakness. We jump over to the VIX this morning. Volatility index, 1758. Relatively low considering where we've been for the better part of the last 3 years, let alone just even since the Fed's been hiking. Nonetheless, we got down to lows of what? This is a weekly we're looking at. A couple weeks ago, 1572. Last week, 1553. Right now, sitting at 1759 so far. Okay, let's jump to the headline of the day. A little bit of debt drama with Biden and McCarthy to meet over the debt drama. Now, Treasury Secretary Yellen's already come out and said June 1st is the date. She's part of the Biden administration. There's an incentive there to put more pressure on Republicans for that date to be forward, right? For what it's worth, take it for what it's worth. But I don't see what comes out of this. More job owning on either side. And man, they are pretty far away. And it's not just where these two gentlemen are. It's where the parties are. And with a split Congress, man, there's people on both sides of the aisle pretty far to the spectrum. And when you got to get everybody, I don't know how that happens, man. And we're going to find out. I don't necessarily think we're going to default. But, boy, we could get some angst here in a big way. And this is far different from, 2011? 2011 was a long time ago, folks, especially in politics, unfortunately. So nonetheless, they meet today. Do not expect any rosy headlines as this comes out, because what's going to happen no matter what is that McCarthy's not really sure what he has, is my perception of things. And so I don't know how that plays out when he's not even sure. As in, how do you negotiate for a caucus that you're really not sure you can get behind you in what you're negotiating with, right? That's the difficulty to see how this comes through, no matter what you think about politics. How you have McCarthy negotiating when in reality, the positions he's negotiating, he doesn't have control over that caucus, man, at all. So Tuesday's meeting brings them face to face, key milestone, but boy, I would not expect much. And we'll just jump to the next headlines, man. Bank runs. There you go. Pac West resumes sell-off as battered regional bank stocks slide. Those are the two I pulled up, man. Those are the two I'm keeping my eye on. Pac West and Western Alliance. PACW and Western Alliance is WAL. Sliding in the pre-market today. You had a bounce, man, but be careful in these bank stocks, folks. because there's probably people that know more than you and I in there. And we saw it happen with First Republic. Okay, there were a lot of people that had a lot of shares of First Republic at a very high valuation compared to what that stock closed out at once the FDIC took control of them. And I saw another report today talking about pay, right? Pay raises at big banks up like 20%. Maybe it was bonuses. Nonetheless, you have pay raises at regional banks. Yeah, that's where that money's coming from. So I don't know how you compete as a regional bank when all the best talent's going to get paid at the big banks, all the money's flocking to the big banks. It's a big problem, man, especially if they mismanaged their balance sheet. Listen, if you're a bank, okay, you can't be a very successful bank if you mismanage your risks in your balance sheet and you take extraordinary risk and lock money in long term for very low interest rate and don't examine the possibility that you may need to tap those funds prior to maturity. It's like Econ 101, especially if you're running a bank, and that is my simple understanding of how to run a bank, right? And so they have some trouble here going on. Nonetheless, you got bank stocks sliding. We jump over to Boeing, catching a little bit of a bid. That should be the case when you sell $40 billion worth of planes, man. Ryanair, 10 jets, $40 billion. That's Europe's top budget carrier. Stocks up on the largest 737 model. Irish Airline is key customer for Boeing's workhorse aircraft. So Ryanair, the Irish company over there, good old Ireland. The order, made up of 150 firm purchases and the same number of options, has a value of $40 billion. Look at this. So hold on. As many as 300 of the 737 MAX aircrafts in a bet on the post-pandemic travel recovery. It's so remarkable how in times of crisis is opportunity, right? What is the saying? Our man Ed Young used to say it, right? What is it is it Japanese or in Chinese? The same symbol for crisis means opportunity. I think that's what it is. And there's a perfect example, man, right? You saw early on in the pandemic when travel ceased to exist, if you had the opportunity, right? Amazon was buying some planes during that period, I recall, because planes were on the cheap, man. Nobody was using planes because flying wasn't occurring. Travel wasn't even occurring at all, right? We're only 2 or 3 years later, and you got companies signing deals for $40 billion to buy 150 firm purchases with as many as 300 going up there. Second largest buyer of the largest 737 MAX. Ryanair's on 150. United came in with a huge order of 250. You got Delta, Vietjet, Alaska, and WestJet. I really have no action on Boeing, man. But you look at it longer term, yeah, they're probably in a good spot. We only got 2 airplane makers in the world, Boeing and Airbus, and the U.S., rightfully so, hopefully, but rightfully so probably, will never let us go out of business in terms of making planes. Just in terms of national security, you want to have a company that makes airplanes. You don't want to just sub it out to one company in Europe for obvious reasons. So nonetheless, Boeing, we jump over to them this morning with a negative market. S&P negative by almost 17 points right now. You got Boeing trading up by about $4. What is that? 2% pop. We go short term on that order. You'd almost expect more, right? You close a $40 billion deal, you get the signature, they're buying at least 150 planes, they might buy 150 more. And what does that even add? Let's see, to their market cap. What are we talking about here? We're talking about a company with 601 million shares. So they added $4, $2.4 billion of market cap for a $40 billion order. Not bad. Stay tuned, folks. We'll be coming back talking to our man Kevin Hincks from TD Ameritrade Network. We'll be right back in 3 minutes. Don't go away. If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years years' experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Welcome back, folks. We got S&P futures negative by about 17 points right now. That's about 0.4% in the red, trading at 41.36. Let's jump over to our man Kevin Hincks every trading day, folks. 12 noon Eastern time, right here on Tiger TV, the TD Ameritrade Network with Fast Market. Your host Kevin Hincks, Tom White, outstanding team. They got some great guests. They walk you through hypothetical trade setups, folks. They talk about options. Every trade setup they have is defined risk in quite a market right now. It's a fast market, as the name says. Kevin Hincks, good morning.
Good morning, Tommy O'Brien. Yet, for the next day or so, it's a little bit of hurry up and wait as we wait for some outcome from discussions on the debt ceiling. I'm not overly concerned about that, but inflation data that we're about to get tomorrow, that should be on the tops of the mind of investors and traders watching these markets because, frankly, Tommy, the data coming out in terms of inflation has been high or hot or much warmer than Jerome Powell would like it to be, Tommy. So this CPI day number that we're getting tomorrow, it's kind of important for the overall market going forward.
Yeah, what is the core supposed to be, Kevin? Is it 5.5 or 5.6? It is a lofty number, man. What do you think of the conversation right now where we're potentially going to get the pause at the June meeting, and we have almost 5 or 6 weeks until June, and maybe we do get the pause. But what do you see in terms of risk on either side, Kevin? And I know this is opinions we're dealing with here, man. But, boy, I see a lot of risks that the numbers don't go down as quickly, versus a number that's supposed to come in at almost 5.5 right now. To see that number dropping dramatically over the next 3 or 4 months, I'm really trying to figure out my own brain here how the next 3 to 6 months play out with the market expectation, with the inflation numbers you're talking about. Do we need to get down to like 4.25 or 4 or have a 3 handle on that number in the next 3 or 6 months? I'm going a little big picture, but what do you think about that kind of conversation, Kevin?
Yeah, the expectations for tomorrow's CPI are 0.4 in the headline number. That's up from 0.1 a month ago. Year over year, 5% to 5%, that's flat. Excluding energy, 0.4, that's flat from last month. And then excluding energy, so the core year over year from 5.6 to 5.5, Tommy. So no real headway being made on the fight in inflation. And it makes me wonder, with the core PCE data that we got at 4.6, that was flat. The wages data that we got that was higher in the month-over-month, higher in the year-over-year. So that has now reignited back upward. So we need a good number out of CPI tomorrow, or inflation is going to start becoming the conversation again. You know, it's interesting. The NFIB small business report came out this morning, Tommy, and inflation was the number 2 concern of small businesses. Labor quality was the number 1 concern of small business. So I feel that inflation that has taken a little bit of a back seat as we get complacent here could rear its ugly head. Jerome Powell could pause and then have to reignite rates higher if this inflation data doesn't start to tamper down slightly.
I appreciate you going through your own opinions, the explanation, just because it makes a lot of sense, and I'm trying to wrap my brain around it, and I'm having some similar logic to what you're talking about. And as you said, we get to find out what happens, and we don't know what's going to happen, man. But an important number, I think, just for the reasons you laid out there exactly, man, because we need some movement on those numbers to get to where I think the market wants to get to, which is a pause and seeing those inflation numbers come down. But boy, there's some expectations that are going to be building if that's the future we have for the next 3 or 6 months. With that in mind, Kevin, we still got earnings coming out, man. We have CPI numbers tomorrow, PPI on Thursday. But what are you guys talking about on Fast Market at 12 today, man?
The feature of today's show, Tommy, will be Airbnb that comes out with earnings after the bell. We'll look at Occidental Petroleum, Warren Buffett's favorite energy company. Yeah. And then I think we're trying to decide on the third one. It's either Wynn Resorts, the China proxy, or it'll be Roblox, the gaming company. So we're all gearing up. Obviously, Wednesday after the bell is Disney. That'll be the high-profile trade of the week. But Airbnb today is the feature name.
Airbnb, man, you talk about volatility, even putting it on a 5-day chart, up from 116 last week to 127 yesterday. Before I let you go, man, I just wanted to ask you in general, Kevin, there's a lot of talk. We see them in the Tigers Den. I'm reading articles all the time about, you know, the 0 days to expiration options, and even the ones you go out a day or whatever it is. Can I ask you what you think about those in general, man? Because I'm reading so many articles. Retail traders, of course, been in a phenomenon recently. I check them out on the Thinkorswim platform. What do you think about the phenomenon going on, man? And just, you know, it's a remarkable thing when you look at 0 days to expiration, and it's become a tool for retail traders, and I'm sure professional traders to some degree as well.
Well, when I think about options and duration, I think about the Greeks, right? And the sensitivity of the Greeks. And other than Vega, which is more sensitive as you get further out in time, every Greek gets more sensitive as you get closer to expiration. Delta does, Gamma does, Theta. They all get more sensitive as you get closer to expiration. So I think education is important when you get these, because you have to understand that you're talking about a one-day option, smaller duration and more sensitivity to what's going on in the overall market. So I think it's great for option sellers in terms of theta. I think it's a little more risky, so traders have to understand the risk involved. But if you do, it's just another great tool for traders to use, Tommy.
I appreciate the walkthrough, man. And yeah, it's pretty fascinating how it's kind of taken hold to some degree. And I appreciate the education you guys give every single day at 12 o'clock, man, because I got the Thinkorswim platform up here. I'm talking to my dad about Delta, Kevin. You know, I'm talking to him about Gamma and Theta, and most of that, man, from watching your guys' program over the years. So I appreciate it. Folks, check it out at 12 o'clock today. Airbnb, that's a great stock as well. Kevin, I appreciate the time, man, and we'll talk to you tomorrow, but we'll be watching at 12 o'clock today, man.
Thanks for having me on, Tommy. Have a great day.
Always a pleasure. Folks, check it out. You heard it. They're going to be talking about 3 great stocks. And Airbnb, yeah, that one's always on the radar, man. This stock has some volatility. And as I pulled it up for this week, right, in a little bit of a consolidation over the last couple months since about February, pushing the highs of that consolidation at 130. You were up at 144. But you backed this thing up to a 3-year weekly. And I think that's when they went public. When did they go public? Yeah, I think that's when they went public, man. Pushed it out late in 2020, as many companies found the pandemic was really accelerating stock prices, right? Pushed it out, traded up to 220 twice, boom. What do? You get a nice double top, you get a nice double bottom at 81, and from there, this year alone, up to 125. You jump over to the Analyze tab, You jump over to the earnings tab. They're out with their numbers today, and you're looking at about a $10 move for Airbnb. And yeah, it's fascinating, those daily options, folks. I do trade them. Not every single day, but I do trade them. And yes, they are high risk because, as Kevin walked through, when you're talking about expirations that are occurring within hours, everything gets accelerated, right? Because that option, whether you're talking about intrinsic value, extrinsic value, delta, theta, gamma, all of those are accelerating because you're reaching the endpoint of that option. For a simple explanation, right? Imagine if you had an option to buy the Qs 1 year out. Well, it's not going to trade penny for penny if there's a chance that it might not even expire in the money. Versus if you have a trade for a Qs that expires today, there's a very high likelihood it's going to expire in the money, even if you're just $5 to $6 in the money, versus a year out, not so much. Anyway, I appreciate the answer from our man Kevin Hincks. We'll be back for the open in a moment, folks. Stay tuned.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN has just launched their new trading room, the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. And now they are expanding the reach with the Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. In the Tiger's Den, you can look over the shoulders of Tom O'Brien and the other TFNN hosts while they analyze charts during their live Tiger TV programs, and join an interactive trading community with hundreds of members exchanging ideas. Interact with other tigers and tigresses as they share trading ideas, news analysis, and discuss the market action all trading day, even at night and on the weekends. The Tiger's Den at Discord is accessible on mobile or tablets as well, so it's always at your reach. To sign up today and become a part of this educational community of traders, just visit the front page of TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. We got markets open. You got an S&P pushing the pre-market session lows. We got a 410 handle on the SPY. We're down 18 points in the S&P, 4134. That's a move of about 0.5%, 0.5%. NASDAQ 100 down about 0.5% as well. You get the Dow off 0.3% right now, and the Russell leading the way off about 0.8%. Let's check in on those hammered banks. Pac West down about 7% right now. Western Alliance down about 4%. right now as you get a little bit of a pullback. And so checking out those options, folks, if you haven't checked them out, all right, you don't even need to trade them to be aware of them, okay? Because the level of leverage that you can create with daily, I mean, that's why people love trading options at the end of option expiration, right? That's why option expiration was always so volatile. That's why you could always make that crush. Well, they've done it every day now. So here's a quick example if you haven't done this, okay? Just to illustrate, here are the SPY. Now, these daily ones don't exist in every equity, okay? You're only talking about the big indices. But what's so cool about them is that the bid ask is a penny wide, okay? And they are super active. So often what happens is that what you really need to be careful of is that so often when you're trading, especially options, you can have illiquid markets, you can have very wide bid-ask spreads, and when you have very wide bid-ask spreads on options that are trading at pennies to just single dollars, it represents a large percentage of the trade you're making, where it can actually, it's kind of like the VIG, which it basically is, right? If you have a wide bid-ask spread, then you have a market maker that's creating basically a VIG for trading that vehicle. And if the bid-ask spread is too wide, the VIG can actually be too large where it can make the trade unprofitable, right? If the VIG of a trade is 15 to 20%, maybe you don't have that advantage long-term, depending. So for what it's worth, they're a penny wide. The SPY right now is trading at 410.85, okay? Now, as Kevin was talking about, you got Delta, you got Gamma, you got Theta, you got Vega, okay? Delta, and I'm just reading it off to make sure I give you exactly the verbiage. Delta helps you gauge the likelihood an option expires in the money, but what the real deal is that you can see how much that option is going to move for every $1 and change in the underlying price. So for instance, we take a 410.78 SPY, just under 411, and let's say we buy a slightly out of the money 411 call. Well, for 89 cents right now, and these are 100 shares, okay? Each option contract represents 100 shares, so that would be $90. If you have $1, that would be $148, okay? It's 100 shares is each options contract. So let's just say we're trading one contract to keep things simple, right? If you were to buy a 411 call, you're buying 100 shares of the SPY. You're buying an option, okay, to buy 100 shares of the SPY. You're out of the money. SPY stays where it is. You lose all of your capital. Here's the kicker here, though. If you're day trading, okay, and you're not going to keep this until 4, maybe you're day trading and you're in and out in 15 minutes, maybe a half hour, even an hour. You're going to be out of this thing by 10:30 in the morning, okay? Yeah, you're going to have some decay, because what's so cool here, right, is if you look at, you have Delta, which is the most followed Greek, okay, because that tells you right away. For the 411 call, even though you're out of the money, for every dollar the SPY moves, you're going to get 48 cents of movement in your option contract. So theoretically, if it moves up to 411.88, your option contract will go from 90 to 91 cents, and it will add the delta of 48. You'd be at $1.38, okay? That's more than a 50% profit for a 1-point move in the SPY. Now, here's the kicker, though, that I found. This is what I see as the real kicker of how this is accelerating everything. I don't know what kind of an impact it's having necessarily on the market, but in terms of the leverage it's creating, okay? And I'm choosing it out of the money here, okay? You can choose a 408 call today where you're $3 in the money and you're only paying $3.24. So technically you're only paying about 24 cents of extrinsic value, okay, of premium for that option. But let's just stay on these trades right here, because when you see the type of leverage you have, okay, let's talk about a 411 call that right now is trading at under $1. For simple math, let's just say the 411 call was trading at about $1. For that, you would put up $100, right? And then you would own the right to buy 100 shares of the SPY at 411 with expiration of today at the close. So theoretically, they're charging you about 10 SPY points of premium, right? Well, we've seen moves in this market of 40, 50, 60 points, et cetera, right? But here's the kicker. So for $100, okay, you're controlling 100 shares of an index trading at 411. Well, what is that, folks? That's $41,000. So for $100, They've given you 40-to-1 leverage, essentially, for a $4,000 position, for a $40,000 position. So what is that? Yeah, it's $100. Yeah, it's about 400-to-1 leverage. Okay, and it makes sense because you're putting up about $1 to control something trading at 411. You can see the impact, folks, okay? And if you do 10 contracts, which is what a lot of people does, that's how the standard setting, even for Thinkorswim, before you can navigate everything, is 10 contracts. You pull it up, 10 contracts. That's what it fires into the order entry screen unless you change it by default. Not one contract, 10. So in theory, you'd have 1,000 shares. You'd have 1,000 shares of an equity trading at 410. That's $410,000, folks, and all you had to do was put up about $1,000. Well, if you're controlling, this is going 10 contracts, okay? If you're controlling 1,000 shares, and again, this is an out-of-the-money option, which is high risk, okay? Do not just start trading these. Create a paper trading account, see how they move, make sure you understand delta, make sure you understand gamma, okay? And more importantly, if you're trading these, you got to understand theta, okay? Because theta tells you how much the price of an option should decrease each day as the option approaches expiration. Excuse me. Now, what's so cool about this is we know they expire today. So what happens is that any option that's out of the money right now on this chain, and we're inching towards the 411, okay, and the 411 is right at about $1 as it's trading at that strike price, okay? So let's say what's cool is the theta for this option is what it's trading at, because technically it's out of the money. So if you understand theta, theta says what's this option going to lose in value if we go through today? Well, the 411 call is worthless if you're trading at 410.86, and it's trading right now at 93 pennies. So the theta is telling you, hey, guess what? This option's going to go down by 93 pennies today, because that's the decay, because it's out of the money option. The one above that's 49. You get into an option that's in the money, okay? And yes, you're going to get some intrinsic value, and then you're going to get the theta is the difference between the intrinsic value and what it's trading at. Do you understand that? That's the stuff that you want to understand before you're trading these, folks. You can watch the show back, okay? You want to understand delta, how much it's moving, but you want to understand theta. And it's so cool when you see that theta matches what it's trading at if you're out of the money, because of course it's going to lose all the money if you're out of the money. You can't be trading these and hanging on to them forever, because if the market's not moving, you're losing a tremendous amount of value. But when you look at the leverage, man, and that's defined risk, okay? That is just defined risk. So what can happen is, and I'm going to finish this conversation up after the break, because you can leverage that in retail accounts in pretty dramatic fashion. So stay tuned, folks. We'll talk a little bit more about this. We got market weakness, man. S&P's off 20. We'll be right back.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The Gold Report. As a precious metal, gold is still king. It continues to hold the most effective safe haven and hedging properties across the global major trading hubs of the London OTC market, the U.S. futures market, and the Shanghai Gold Exchange. The Gold Report. Tom O'Brien publishes his weekly Gold Report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, the South African rand, as well as 25 different mining equities with specific buy-sell recommendations. The Gold Report. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Subscribe to Tom O'Brien's Gold Report newsletter now at TFNN.com.
Will the S&P 500 continue to climb? For bold trades on U.S. large cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. We got S&Ps down about 18 points right now. NASDAQ 100 down 73. The Dow off 28. The Russell off about 11. We got some weakness right now. Jumping back into this, we'll spend some more time because we go over the news, man. So we have the debt deal going on today, right? We have CPI out tomorrow, man. It is all about that CPI number. I agree a lot with what Kevin said. I appreciate him taking the time. Tuesday, Wednesday, Thursday is coming on. There's got to be some lofty expectations on the numbers tomorrow. So let's get into some options today. So we've been talking about these numbers. So again, delta, folks, okay, is the number that changes per every change in the underlying equity, okay? Now, what's so cool here, so I was talking about the leverage you have. That's the one thing that I just wanted to get across here because I don't think a lot of people really understand the absolute leverage. And the reason why you're offered this much leverage by the market is because it's defined risk, okay? So they're not worried about giving you 10,000 shares of the SPY, okay, because they're really not giving it to you. They're just giving you an option that has defined risk behind it because they're going to take that money and you can't lose anything more than that. Now, to finish up this conversation, though, because here's what I wanted to show you as the final part. I showed you the simple trade of being the one that's paying the premium, okay? You think the market's going up, you buy a call. You think the market's going down, you buy a put. You need to get a move greater than what's implied. And what's implied right now, as I just went over it, is a $2 move in either direction. That's because an at the money put or call, they're going to charge you about a 1 point in the SPY. Now, boy, if you cherry pick a day and you're right directionally and the market trades up 73 points like it did on Friday, and you're only paying 1 point for that privilege, you've made almost 7 times on your money, right? Yeah, so you can see the impact that they can have. Now, here's the kicker, though. You're paying premium, right? We went over the theta. The decay of an out-of-the-money putter call is going to decay 100% that day because it's worthless if it doesn't expire in the money. That's why you're getting extreme leverage. But here's the other side of this trade, okay? Let's say you think the market's going to stay flat to bearish, okay? You say, well, can I buy a put? Well, yeah, you can buy a put, but you need about a move of about a full point throughout the day, and that's a percentage point. That's not nothing, man. 10 S&P points, 1 SPY point. You need that move to make up the premium you're paying right now at 9:44 in the morning. So that's a lot of premium, man. What if I only get 7 S&P points? I'm going to lose money? So yeah, you're going to lose money if you get 7 S&P points with that trade. Say, well, what you can do is you can be the one selling the premium, okay? You sell somebody a call at 412. Market's at 411.23 right now. So they're about 75 cents out of the money. This is a trade you could make, folks, okay? I'm not advising it. There's no market perception around this. This would be a bearish trade. I'm not advising that at all. But if you were bearish, you could make this trade. Here's what you do. You sell somebody a 412 call, excuse me, which you take a 56-cent credit for. Now, you could just do that and it would be selling a naked call. The problem is the market accelerates higher. Your losses are uncapped. I would never advise doing that, folks, okay? You can lose basically infinite money if you sell naked calls, because the market could just go up. I mean, you could have, you could have a discovery of anything tomorrow and the market accelerates 500%. Point being, so what do? You cap your losses by buying a call back at the next level. And what that is you're selling a call spread from 412 to 413. This is a really cool trade. I'm glad it lines up like this. You're 75 cents out of the money, which is a good thing because you don't want this to enter this trading range, right? You're selling somebody else, and these are 10, as I said, okay? You're selling somebody else the right to buy the SPY at 412. You want to see it stay under there. These expired today, okay? And for that, you're taking in $300 because we're doing 10 contracts at 100 shares, and you're risking $700, okay? Because you have a full SPY point to cover. It's 1,000 points when you have 10 contracts. It's $1,000 when you have 10 contracts going through 1 point in the SPY. And for that, though, you're the person collecting the premium for an out-of-the-money option that expires today. You get all of that decay, and you have about 75 cents that the SPY can move against you just today alone, and you still reap a maximum profit. Now, a lot of people are not comfortable risking more than they can possibly make in a trade. I understand that one, okay? And that's the difficult part to get over this. But here's the last part I'll tell you that I think about when making these trades is you don't have to risk them for a max loss, okay? You can have stops in this trade just like you can have stops in any other trade, okay? So right now, as this is ticking around, we have the ability, we'll call it 31, why not? 30, we'll call it 30 for simple math. We'd get a $300 credit, and we're on the hook for $1,000 if it trades from 412 to 413, okay? Because technically, we're going to have to sell it to somebody at 412. We're going to have to buy it back at 413. That's going to cost us $1,000 for 10 contracts. We're going to offset that with the $300 we take in a credit. When we initiate the trade, it's a $700 loss. But here's a kicker, okay? You don't have to hold this through expiration, through today at all. If this spread moves against you, let's say the SPY trades up to about 412 quickly, you could close out that position, okay? You'd probably have a loss depending on how quickly it accelerated to that 412 price point because, like anything, there is going to be decay. There is a decay of 31 cents in this trade throughout the day if it stays where it's at right now. I just wanted to bring that up because that's the really cool part of this market. And with very tight bid-ask spreads, okay, if you think the market, here's the coolest part about this. And we've sent 2 segments on it, but you want to understand it because it's such a big part of what's going on, retail and professionally, okay, with the ability to have this type of leverage on a daily basis, is that the premium that's existing, right, is on a daily basis, that's going away. So if you're the one absorbing the premium, you can have a bearish or bullish bias, and you could have no bias in terms of just collecting the premium outside of it, but you don't have to hold it to expiration because I think it's so cool that you can be the one closing out that trade. And if you think the premium is too much, you can go on both sides of that trade. So it's beatable, man. It is beatable in terms of collecting premium as long as you're quick enough and maybe you're rolling those trades, and I'm getting into a real active scenario. But the coolest part about it is this market is priced where, just like I told you, it's about a $2 move in the SPY in either direction today, okay? If you think this market charges too much money to have leverage in it, you can be the person paying for that leverage. If you think, though, this market, because people say, options, everybody loses money, right? Daily options, can you imagine retail? They're getting taken to the shed, man, on daily options. I'm sure option traders, market makers are in there collecting premium every single day. Well, if that's what you think, the bid-ask spread is a penny wide, and you can be the person in there collecting the premium every single day. So in that regard, it's a wide open market. And when I look at these types of trades, okay, you still have to manage them. This is not a set it and forget it, okay? Because you start setting it and forgetting it on trades where you can lose $700 to make $300, and if you're ever directionally biased or you get rips in the market, you will be exposed to some severe losses. So no exact trades recommended during these 2 segments at all, folks. But I hope it got your mind thinking a little bit about the possibilities, because these types of trades in particular that expire today, maybe even tomorrow, you get a little bit more premium, okay? Very interesting when you look at, and folks, that's making 300 on 700, okay? That's like a 40% profit on the risk that you're taking with the equity. Stay tuned, folks. We'll talk about some other equities when we get back. S&P's down 17. We'll be right back.
TFNN has just launched their new trading room, the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. And now they are expanding their reach with the Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. In the Tiger's Den, you can look over the shoulders of Tom O'Brien and the other TFNN hosts while they analyze charts during their live Tiger TV programs, and join an interactive trading community with hundreds of members exchanging ideas. Interact with other tigers and tigresses as they share trading ideas, news analysis, and discuss the market action all trading day, even at night and on the weekends. The Tiger's Den at Discord is accessible on mobile or tablets as well, so it's always at your reach. To sign up today and become a part of this educational community of traders, just visit the front page of TFNN.com.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. We got the Dow inching into positive territory by just 2 points right now. The Russell off almost a full percent. You're off 15 points. That's 0.9%. We got the S&P pretty much hanging out where we've been for most of the session so far, down 17 points or 0.4% in the red. And jumping back, I can't help myself. Jumping back to that discussion. One final thing I wanted to point out, and I got to jump over to the SPY here because that's what we're looking at, not the ES, is that I was looking at contracts that expire today, correct? So the contract that I had in there was talking about the May 9th expirations, right, which is today, and what you could do in terms of buying, selling, maybe selling somebody else a right to do it, okay? What's so cool, the Thinkorswim platform, you go in here, that was the trade I had up, which was selling maybe somebody an out-of-the-money call spread, okay? You sell them a 412 call, you buy back the 413 to cap your risk, you collect a 30-cent credit, you're risking $7 for every $3 of profit in this trade. And as I mentioned, I understand that's a little bit hard for people to get over sometimes. You can still manage these trades. You don't have to let it go all the way to 100 loss, okay? You can get out of this spread if it goes to a 50-50 at some point. Maybe you're risking only 20, okay? The market can run sometimes, but it's a very active market when you're trading something like SPY options anywhere around where it's expected to expire. Now, what's so cool is they have them every day, though. So this is an out-of-the-money call spread at 412. Let's just push it out a couple days to Thursday. Okay, well, you got to go through CPI and you got to go through PPI. Okay, so you better believe there's going to be more volatility, but check out the trade. You're still 80 cents out of the money. You're selling somebody else 80 cents out of the money. You're collecting between about 47 to 48 cents. Okay, this might not get fired off at 48, but they're still 1 penny wide. You're almost collecting as much as you're risking, and meanwhile, you got 75 cents in your favor. That's a pretty cool trade, man. You know, you're risking almost as much as you're going to get in profit. You're risking $5.20 to make $4.80. And meanwhile, you got 75 cents in the SPY, and that's only with action through Thursday. So anyway, folks, I hope you enjoyed it. I appreciate you starting the trading day off. Stay tuned. We got our man Basil Chapman coming up next with the Tiger Technicians Hour. Steve Rhodes at 11. Fast Market at 12. You heard our man Kevin Hincks. He'll be talking about Airbnb among some other equities. And we got our man Larry Pesavento and Tom O'Brien, my dad, this afternoon. Thanks so much, folks. Have a great Tuesday. We'll talk to you tomorrow.